Hi, everyone. Today, let's talk about stocks I'm trading. Every week, I go over the technical analysis as well as a news item for some of the stocks that I'm trading. And first up today is AMD. Second up today is Disney, and they recently laid off 28,000 employees. And lastly, for this episode, Netflix. They had a pretty strong rally, rising over 5.5%. But where do they go from here? If you like financial news, trading stocks, and making money, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. Looking at the charts for AMD, you can see we had the March dip here, and already by April, it was back at its previous highs, and then it's basically uptrended since then. We had a pretty dramatic run here at the end of August. It topped out around September 1st, which is when we started that little bit of a downtrend, especially in the tech stocks. And I think we're about fairly priced here at $81.50. So if you wanted to sell puts in this position, it's not a bad time. So far, AMD has been a great stock to sell puts on. As you can see, there was no point where I was in a position where the stock didn't bounce back and I made money. Even in this downtrend, I was selling puts the whole way through. It came down and touched my put position at $75 a share and has since bounced up since then. Looking at the MACD, it's basically neutral right in the middle, which is why I'm saying it's fairly priced. And then again, looking at the RSI here, we're right around 50. So it could go up or down from here. Maybe an iron condor would be a better trade, but I've been bullish on AMD for quite a while and I continue to remain bullish. Moving on to the article, traders are bullish on AMD. As I mentioned, the stock did go down in September, falling around 10%. And analyst Todd Gordon from Trading Analysis still sees more upside for the stock. They view strong demand for next generation Zen 3 based CPUs, and even if demand for current chips goes down a little bit, they see strong demand for the new chips when they come out. They expect AMD to continue to eat into Intel's market share. If you are a short-term trader like I am in terms of options, AMD does report earnings on 27 October, so be aware if your expiration is after 27 October. I normally go 45 days out, so my current options are past that date. AMD currently has a PE ratio of 160, which is pretty ridiculous, but the expectations for future sales for AMD are quite high, and they're looking at around 51% growth next year. With that kind of growth, it's only trading at 45 times forward earnings, so it may be expensive right now, but with current expectations, it's actually undervalued. He then says he expects the mid-70s to act as support, along with the 50-day moving average, which is basically what we saw. It bounced off the $75 level and is currently in the 80s. Looking at my current position in AMD, I sold the $72.50 puts and purchased the $50 puts, and I received $2.59 for this position, and it's currently worth $3.11, so I'm actually down on this position right now. But my break even is $70 a share, and I'm not really worried about it going below this price in the near future. Moving on to the charts for Disney, it's quite a different story. We have the highs here in February, and then we had that big sell-off due to the Rona. And then we recovered a little bit, but we haven't quite hit those highs of February. And then we had a little bit of a sell-off along with the rest of the market in September. And zooming in here, you can see we are just above the 100 and 200-day moving averages. Looking at the MACD here, you can see we are uptrending, which means we might have some momentum to the upside. And looking at the RSI here, it is pretty low at 38, which to me means this is a good time to sell puts, and you'll be able to get a pretty good credit while getting pretty far away from the current price. Moving on to the article, Disney laid off 28,000 employees. These 28,000 employees came from the Parks, Experiences, and Consumer Products division, and this is mainly due to the Rona and limited attendance at the parks. As a result of this, the shares sold off 2%, but the company did say that 67% of the 28,000 were part-time employees, but the company declined a full breakdown of the layoffs. Disney says the parks in Florida, Paris, Shanghai, Japan, and Hong Kong have all reopened. However, the park in Anaheim, California has not opened, and I think this is primarily due to the fact that the California government has been one of the most strict governments that oversees one of Disney's parks. Disney said that they are working to cut expenses and have suspended capital projects, but even with those cuts, they still needed to lay off these people. Disney parks accounted for 37% of the company's revenue, And due to all these closures, they lost $1 billion of operating income in second quarter, and they reported a loss of $3.5 billion in third quarter. Despite all of this, Disney does continue to make money, and most of this is coming from Disney Plus. They're expected to reach 159 million users worldwide by 2024, including 50 million in the United States. And this analyst gives them a target of $136 per share despite the economic pressures. Looking at my position in Disney, I sold the $120 puts and purchased the $115 puts, and I received a 98-cent credit. Since then, the stock has gone down, and this is currently down $47, but I am long-term bullish on Disney, and if I have to roll this position, it's not the end of the world. The next earnings for Disney is the first week of November, so be aware of that if you are going to take a position in Disney. Moving on to Netflix, this has a somewhat similar chart to AMD. We had a very small dip here in March, and it recovered back to its highs and broke those highs very quickly, and has since accelerated up to over $550 a share at one point, and has since retracted down to $503 per share. And now we're forming a somewhat downward channel, or what might end up being a downward wedge. And I think this is just because it's been such a ridiculous rally in such a short amount of time. These lows down here were at $300 a share, and it almost doubled to its highs, like I mentioned. However, it has somewhat of a short-term bearish trend right now. Zooming in a little bit, you can see what I mean. We're starting to form a bottom here. We did bounce off the 100-day moving average here, but we didn't retake those highs in September, which just gives us another data point towards this downward channel. This channel does have a pretty wide berth, so if you were to take a short put position while the stock was at its highs, you might have taken a loss during that next retraction. So if you're looking to set up a Netflix position right now, it's probably not a good time, and you might want to wait until it gets closer to $475 per share. Looking at the MACD, it has a little bit of upward momentum, but it's starting to wane, and the RSI is also moving in the downward direction. Another note is when you're trading stocks around this price, if you're trading options, you need to put up more capital and trade a wider spread in order to capture more of that premium. Otherwise, you're going to pay a significant amount for the put you're purchasing to lock in that credit spread. If you have any questions about what I just said, definitely put them down in the comments section. Moving on to the article, why Netflix jumped 5.5% on Thursday. They say a new study showed that Netflix had the second highest usage during the Rona, second only to Zoom communications. To be fair, they only surveyed 3,000 consumers, but they did survey 100 brands across 10 different industries. With data like this, it seems like consumers are bonding to Netflix, and that means that they will be able to preserve their viewership in the future. There is also mention of Netflix raising its monthly subscription prices by either $1 or $2 per month, which would generate around $1 billion in additional revenue. Looking at my position in Netflix, this is a 15-point wide put spread down to $445 per share. And you can see what I was talking about here. I only received a $325 credit because I had to pay over $1,000 for the $430 put. If I put up more than this 15-point spread, I would be able to capture more of this $1,000. But right now, my account is not large enough to do that. Let me know down in the comment section what you think of my positions. Definitely like and subscribe if you got any value out of this video. Of course, none of this is financial advice. This is all for entertainment purposes. Make sure you like and subscribe before you go, and have a great day.